Andrew McNair from SWAN Capital with our educational economic update for March 2017. In this month's video, we're going to be discussing some major headlines that influence markets in February and provide you some insight into what these developments might mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. Now, February 2017 was a month filled with record highs in the domestic markets. If you look at the S&P 500, the NASDAQ, the Dow, they both hit a number of new highs last month. And if you look at the Dow, it went on a record-busting streak. In fact, after reaching 20,000 for the first time ever in January, the Dow continued to hit trading day highs from February 9th to the 27th. The last time we got a string of records like that was 1987. The second time was 120 years ago. So seeing stocks rise like this can be an exciting experience, but I want to caution you not to get caught up in the euphoria. Just as emotion has no place in investing when markets are volatile and changing, emotion has no place when markets are growing rapidly either. So let's dive deeper and review some of the fundamental data that we learned in February so you can have a better understanding where the economy stands. On the labor front is our first stop. We've had actually somewhat mixed data there. See, the January jobs report shows that economy added more and more jobs than experts predicted. It's the 76th straight month of growth. But on the other hand, hourly earnings and the labor force participation increased only by a small margin. Now, unemployment has actually ticked up a little bit, and that's probably because the workforce is back in the market looking for a better job potentially. Another area that we saw modest growth was the revised GDP numbers for the fourth quarter of 2016. Now, each quarter, the Bureau of Economic Analysis pumps out the GDP, the gross domestic product, which is basically the total dollar value of everything that people and businesses create during that period. And it's actually a critical number, a critical indicator of the economy's health overall. Financial analysts, investors look at it all the time. And the Bureau of Economic Analysis actually pumps out the advanced number, the preliminary number, and the final number. So the preliminary reading said that the consensus was the reading would increase to 2.1% from the 1.9% that they guessed. And in reality, the reading didn't change at all. It stayed at 1.9%. Now, rather than indicating that the economy is slowing down, however, just really one aspect contributed to that decreased growth number. Lower net exports is the key word. Lower net exports. What that is it's trade. Trade is integral to our economy, and maintaining a healthy trade balance is key. Now, the political environment is always going to change that. It's going to ebb and flow. But for now, that's what we want to keep an eye out is that GDP number and look at it as a total and comprehensive with other important measurements. Now, that's it for this month's monthly market recap. If you have any questions, if you want to schedule a review, definitely call the office at 850-380-9558. That's 850-380-9558. I do want to tell you about a client event that's coming up, and that is our 2017 Shred Day. This is a great event to bring out some of the clutter that you have in some closets that you might be saying, I want to get to that, I want to get those documents shredded. Bring them out and grab a hamburger we're going to be grilling out. And also bring a copy of your tax return so we can keep one of those on copy for you, on file. So again, thank you for watching this month's monthly market recap, and I'll see you next month.